With all the drama in the markets going on in recent times, a lot of people have been asking me, Kai, what should I actually be doing with my money right now? And that's why in this video, I'm going to walk you through the full framework that I use personally for my own finances. Nothing here is theoretical. These are all exact habits and products and mental models that I rely on every single month for my own funds and investment portfolio. We will be talking about 5 pillars from earning money, saving, investing, protecting, and of course, keeping cash for opportunities when they arise. By the end of this video, you'll have a practical checklist on what you can do with your money. So let's kick things off with the first one, and that's where wealth truly starts, and that is income. There's no way around it. Personal finance discussions often obsess over frugality and high saving rates, and that's important, right? They do matter, but they're limited to the size of your paycheck. To illustrate, imagine 2 people, right? The first one earns 1,000 euros a month and manages to save an impressive 50%, which would be incredible. Tucking away 500 euros for investing is really well done. The second person, however, earns 3,000 euros, but he only manages to save 30%, right? Way less. But that smaller percentage equals to 900 euros. One has almost double the monthly investing power. The person earns more money. So income sets the ceiling on wealth. Frugality simply determines how close you come to that ceiling. So your first lever is to raise that ceiling. And that can come through many different ways. Most commonly, people want to negotiate their salary, right? If you're employed, that's probably your first bet. The second thing, once again, depending on your situation, but I would really urge you to look into building a side hustle. Regardless of your 9 to 5, I did it myself. When I was running a hotel, I started a YouTube channel and started making a bit of money on the side. I also was running different dropshipping stores and tried different things to earn more money. And for me, it was more about the experience I got out of it rather than the actual money, because I was earning a nice income at the time. But still, I knew I had more potential, and play around with the side hustle is one of the best ways you can go about that. Especially these days with AI tools, being either for free or costing very, very little. You have endless opportunities. There's so many ways out there how you can use AI to your own advantage. It can help you build websites. You can run marketing for some companies, right? As a freelancer, you can get all the scripts, all the ads, everything run through AI for you on your behalf and sell it as a company for a service. So endless opportunities. And of course, check around here on YouTube. There are countless of channels only talking about side hustle ideas. And again, you have to just experience different things, right? I tried many different things until I found something that works for me and I really like and stick with me. Your first side hustle is probably not going to be the final side hustle that turns into a major glowing business, right? But by doing that, you also improve your own skills, which later on, even if the side hustle doesn't work, you can monetize, and your employer might reward you for it and promote you or pay you more salary because you become better in the process, right? When I did my dropshipping store, I learned so much about marketing and all these online tools that I actually in many ways could challenge my own marketing team because I was really sharp, I was on point, and I knew what's going on. So I think that's very, very important. At the same time, I also want you to be aware of lifestyle inflation. A common trap looks like this. People get an increase in salary, and guess what? Their expenses increase accordingly. All of a sudden, they go to a fancy new gym, they upgrade their apartment maybe, get a new car, and living lavishly. And there's nothing wrong with it per se. Obviously, we work hard to treat ourselves also. But very often I saw that people immediately spend that increased salary or income, whatever it is, on upgrading their lifestyle. And often, while they earn more, what they saved at the end of the month was actually exactly the same as it used to be. And that's a sure way how we stay in that hamster wheel. You're kind of moving in the same space, and that's not really how you grow your wealth long term. The next pillar we're going to talk about is safety. And I put that even before investing. An emergency fund is not about returns. It's about resilience and sleeping peacefully at night. It really allows you to stay cool and calm when the markets go wild as they have been in recent times. Because the worst thing is to be in a situation where we are right now, right? When the markets drop 20, 30%, depending on where you invested. And then you have an emergency and you have to sell at a loss, and then you materialize the loss. Otherwise, it's just a paper loss. You haven't actually lost money, and it might bounce right back in a few months, right? But if you had to sell now because you needed the money, you're really suffering and losing out. And that's where a lot of people really hurt their wealth building process. So make sure you have some cash buffer set aside in a separate account that you really only tap into in the case of an emergency. And how much you need in this? Well, it really depends on your own situation. Think in months of essential expenses: rent, mortgage, groceries, insurance, core utilities, basic transport, whatever that number is. If you are single with a stable employment, aim for roughly 3 months. When I was young, that was kind of my number I was aiming for. A dual income couple with no children can stretch it for maybe 6 months. If you have a family, on the other hand, with dependents, maybe you have 2, 3 kids, then obviously you want to have a larger emergency fund available, maybe 6 to 12 months even. It really depends on you and your life circumstances. See what you feel comfortable with, but 1 month is definitely not long enough because again, the economy is also very volatile. You might be losing your job or your side hustle income, and all of a sudden you have no income coming in, and then you're forced to sell your investments, which you don't want to be doing. And of course, very important also, place the money in a high yield savings account with the same day access. Don't lock it up. Some banks, they promise you some high returns, but you have to lock it up for, a few months or even a year. So for me, having that flexibility is definitely worth more than having maybe 1 or 2% more interest returns on my money. That way I can tap into the money anytime I need. That's why it's called an emergency fund. You can't plan your emergencies, right? And that's why personally I keep my emergency fund and my general short-term cash, we'll come to this later on, in the same high interest account because I want to get the most out of my money, right? I want to find the account that pays me the highest interest without any lockup period. And I might as well keep all my funds over there. Now, I don't recommend that for everyone. If you're kind of not really diligent with your money and you're kind of prone to tap into the funds if they're there, then better have 2 separate accounts. One really for emergencies that you don't touch, right? And the other one for cash that you need for your daily transactions and so forth. For me, I put pretty much everything into one because there I get the highest interest rate, but I also know I will not withdraw more than I have allocated for the emergency fund. So if you can handle it yourself, I think it's a good way to go about it. But some people I know, they also like 2, 3, 4 different accounts, one for holiday, one for spending, one for that, and that's totally fine. Ultimately, it has to work for you. Now, over on my website, Match My Broker, you also find over here high yield savings account for the EU and UK. More countries will be added in the future. Those will be updated on a monthly basis. And you see right now where you can get the highest interest for your money, different rates, and all of those are without any lockup period. So you can see here what might be relevant for you, and then obviously check it out and maybe open an account there if you're interested. But yeah, that's where I keep my money. A lot of it right now on Train 212 and then Revolut. But again, other options are coming up, and as they change, I will obviously update this table over here so you can always optimize your interest return on your money. Right, with a solid income engine and safety net in place, we want to use the excess capital and money that we have to actually invest and start growing our money, right? That's what I mostly talk about on this channel, investing to grow our wealth long term. If you just save, well, it doesn't really grow much, right? On 3, 4, 5% interest, you're kind of keeping up with inflation, but we want to outpace inflation and grow our wealth long term. So when we talk about investing, most people do not need exotic instruments. For example, 3 different ETFs can pretty much cover all your investment goals. I invest, for example, into the S&P 500, which delivers a low-cost exposure to the largest, most innovative companies in the US. Secondly, an all-world ETF, which captures developed and emerging markets across the globe. That really helps you to diversify globally, especially now what's going on with the US. And lastly, you might also want to have a dividend ETF in there, which pays you a passive income over time, right? So again, those 3 ETFs are just one example. They're not investing recommendations, but it just shows you can easily set it up, automate it, set and forget it, and it will just grow your wealth over time. So ultimately, pick 1, 2, 3, whatever it is, automate monthly contribution, because honestly, I think complexity kills consistency. If you have to scratch your head every single week where to invest your money, what to do with it, you end up doing nothing because it will just overload you, right? And just a brief example of how powerful investing can really be. You start with 0, but you manage to invest, let's say, 1,000 euros every single month. Let's say the expected annual return of 9%, as it was historically in the S&P 500 over the last 30 years. And your deposit increase, which you managed to increase, hopefully in the future, you'll be able to contribute more than 1,000 euros, but let's say around 3% every single year. And let's say you're really early on, you're maybe in your 20s, so you easily at least have a 40-year investment horizon, right? So when you then calculate, well, guess what? You have a final balance of almost 6.5 million euros. So really not too shabby. From your own money, you would have contributed 900,000. And what you earned in growth over time is 5.5 million. So the majority of the money came purely from investment returns, right? And that's why I say it's so important to invest, because otherwise you would have been left only with that amount. But by investing, you got that surplus over here. And I think that just shows you how powerful it is to invest over time, long term. Now, obviously, this looks really nicely growing, but keep in mind, like the situation we're in right now, portfolios goes up, portfolio goes down. But long term, obviously, the idea is to compound and grow it into a nice wealth building machine. But I also want to mention the importance of conviction, because conviction can't be outsourced. If you copy my positions without understanding, you will panic when volatility hits. And I see too many people following what others tell them to buy online, on social media and so forth. And that's great when the markets are up. But what we see right now, when the markets correct 20, 30, 40%, and you haven't done your own research and you're not convinced in that company, guess what? You will panic sell. And that's, once again, as I mentioned before, really bad thing to do. So you really want to have conviction, right? Now that I added Amazon to my portfolio, for example, it's just an example, I really studied the company and I feel very comfortable. So even if it drops now quite massively as it did, I feel comfortable investing more in it because long term I know I get a better entry price and I know the long term outlook of the company. I'm fully convinced in it. I don't rely on someone else, on them telling me it's a good company. I know myself after doing my own research, it is a good company. Now, again, I might be wrong, but I know I'm convicted in that company. And that's why I keep on investing even when it drops. Moving on to the next point, and that's protection. And of course, talking about protection is less glamorous than talking about growing your income or how to invest. But it's super, super important. And that's why I always recommend do your due diligence on the stockbrokers and banks you're using. Before transferring your funds, really evaluate the institutions where you're sending your money to. Are they regulated? Are they protected? Are they audited by financial authorities? Where are they based? What is their fund protection? Obviously, on my channel, I talk about different stockbrokers that I use myself and can only recommend. But you will be surprised how many stockbrokers and weird brokers and crypto exchanges approach me on a regular basis to even offer quite a lot of money to talk about them. And I just can't because I know they are scammy and I wouldn't put my own money in there. And obviously, I invest to grow my money. So why would I take the risk to lose potentially everything by using a scammy broker or exchange? It's just not worth it. So really do your own due diligence and make sure you really go with legit service providers. If it sounds too good to be true, it probably often is. I've seen some services where they pay me 14, 15% on my euro holdings, which is just outrageous, right? It just doesn't make sense. You cannot guarantee that without taking on incredible high amounts of risk. And that's why I wouldn't do it. Same with my crypto, right? Right now, we're really not anymore in a bull market. Well, guess what? I used to have my money on a crypto exchange for a while to get some nice benefits out of it, especially high interest rates. But right now, for me, it's just too volatile. And that's why I actually decided to move all the funds off the crypto exchange. And now I have all my money on a Ledger hardware wallet. And I just sleep much more peacefully at night, knowing that my funds are protected. Because otherwise, I literally blindly trust my money with them, hoping they safeguard it. And hope is usually not a good strategy. And that brings us to the final pillar, which is frequently misunderstood. Cash is not laziness, right? It's flexibility in liquid form. And I think it's very important to distinguish between two cash buckets. The first one we spoke about is your emergency fund. And the job of that fund is basically survival. Now, the second bucket of cash is the opportunity fund. It basically helps you to capitalize on opportunities when markets presents bargains, as we might likely see very soon. I keep both of those funds in the same bucket, on the same high yield savings account, but you might want to have two separate accounts for that, and that's totally fine. But make sure you still earn some nice interest on it. Don't just keep it at a zero interest paying account because there you're really losing money on your cash. And in the past, personally, I was actually quite cash poor. I was so obsessed with investing every single euro, dollar, whatever I earned into my various investments. But right now, in the situation we're in, I really value having my emergency fund plus higher cash holdings, because once again, I might want to capitalize on market opportunities, right? If I see a major dip in a company or ETF that I really like, well, I have more funds available to invest in it instead of my usual DCA, which I continue the same amount every single week. But maybe I really see a major drop and I can just deploy a little bit more than I would normally do on a weekly basis into the market to build up a higher position. Or again, hopefully we'll be able to invest more into real estate in the future. Well, guess what? For that, I do need some cash for a down payment for a mortgage. Cash is not investment, right? It just gives you optionality. But I think that's very, very important to have. And of course, you also want to be able to spend on life. I mean, I spoke about lifestyle creep, but also don't forget we're investing money to grow our funds and accounts, and that's all great. But ultimately, we live on this earth to also enjoy a little bit, right? I see some people so obsessed, like I maybe also used to be a little bit too much in the past, to invest every single euro. They forget to enjoy life, go on a nice holiday, treat yourself to a nice restaurant, massage, hotel, whatever it is, right? Within your means. If you earn 600 euros a month, then going to a lavish 5-star hotel and spending 1,000 euros a night probably doesn't make sense. So it should be within reason to where you're at in your life. But once again, with that cash on the side in a different bucket, different from your emergency fund, you feel less stressed when you do want to do something nice, or a friend calls you up, let's go on a little weekend adventure, and don't have to worry, oh my God, I just invested my last euro, I don't have any money, let's tap into the emergency fund. That's not what the emergency fund is for. So I think that's really important and we shouldn't be forgetting about that. Well, there you have it. Really focus on controlling what you can, automate what you can, and stay calm about the rest. Financial freedom is not a single giant decision. It's basically a combination of 1,000 small, boring choices that compound quietly in the background over time. Hope you enjoyed the video and you got some value out of it. If you still have any questions, pop them in the comments down below. And if you enjoyed it, give it a like, subscribe to the channel. Next up, check out this video here. As always, thanks for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.